Jeff and I, we trade Forex for a living, and we teach people how to trade.
Oh, you all teach people?
We teach people how to trade, and we trade as well.
You teach people how to trade, day trade. How well have you done?
I have been trading for over 6 years. I learned how to trade for people who used to work at the institutional bank. Jeff over here used to work at the Bank of New York, and the other guy who mentored used to trade Forex for the government. So we very well at what we do.
What kind of success have you all had? I saw that the market did a downswing now.
You can make money going down or up. We call that short in the market. So if the market going down, that's good for us too. The market going up, that's good for us too. So we show people how to identify where the institutions are selling, where the institutions are buying, because the market have to go down to create more buyers.
Okay, so how well have you all done?
I'm very consistent. Very, very consistent. The best traders lose 60% of their trade. So if you win 40% of your trades, let your profits run. So we are very consistent.
Why did you all decide to get into day trading?
I decided to get into trading because Jeff introduced me to it, and I always loved numbers. I love numbers.
Okay.
I'm a numbers guy.
Okay.
And when numbers make sense, I'm with it.
So what were you all doing before?
I used to promote concerts. And do a lot of... Hello, everyone. My name is Berg.
Hey everybody, my name is Jay. We coming to you from currencyformula.com. We had a crazy busy day, but we had to come and tell you guys about this week's setup. I'm gonna let Berg jump into it. We're talking about the USD CAD this week.
USD CAD is the United States dollar and the Canadian dollar, which is the symbol USD, CAD. We look to short, sell the market. So short and sell is the main thing. The hoping the market, we're predicting. We ain't hoping. We're predicting the market is going to go down. So last week on Thursday, the market created a shooting star. As you can see right here, it retraced it back halfway up the shooting star. So we're looking to short at the 1.31 area. This area right now, we're going to start scaling into our trade. If the market closes above this shooting star, I would say around the 1.32 area, you exit your trade and you're going to shoot for the short around this area of supply. But more than likely, this is the area to short back to this area of resistance. See how the market was to close above strong right here in this area? So your target's about 100 pips. So if the market was to reverse right now where it's at, you would exit your trade here and look to buy at this demand area of the broken supply. If you could tell, the market went sideways. And then when the interest rates came out, Wednesday? Was Wednesday when interest rates came out?
Yep.
Interest rates came out. They kept the interest rates the same. So a lot of the buyers kicked into the market to chase price up to supply. So if you are buying in this area right now, you're on the wrong side of the trade, I would exit my trade and start looking for the shorts just because it made a daily shooting star. So right, shooting star. Write it down for me, Jay. Okay.
All right. So what we're gonna do right now for a little bit, we are going to kind of explain what a shooting star is, right? I know some of you guys are probably asking, what is a shooting star? What's the significance of a shooting star? So a shooting star is when the market rallies, which means buyers come in at an extreme rate. So the market goes up. And then it aggressively falls to the downside within the same day, within the same hour, within the same 4 hours, 8 hours, whatever time frame you're looking at. So if we're looking at it from a candlestick perspective, this is how it will look. And the important thing about a shooting star is the high, the entire length of the candlestick needs to be 2 body lengths at minimum of that range. So what that means is the market had to bounce up extremely aggressively to the top side And then before that candlestick period closed, it had to close with 2 body lengths of the entire scale of that candlestick. And if we go over here, we can show it in a little bit more of a, let's say, a colorful manner, right? So when we were talking about climbing aggressively, the buyers coming in, this is what we're talking about, that aggressive launch. And then we're talking about the aggressive pullback. And this right here is your indicator. So that means a lot of buyers came into the market, but then at the same time, there were more sellers there. So the sellers overtook the buyers. So that's the entire premises of a shooting star. And that's going to be the basis of this week's trade, this week's short for the USD CAD.
How you doing, everyone? We are back. I am Berg. This is Jeff right here. And for we from Currency Formula, you can reach us on Instagram at Berg Forex, hello_I_J, Berg and J Forex, and Trading on Repeat. It's our Instagram pages for Currency Formula. And today we are talking about pips. What is a pip? Percentage in points. This is what this means. You're going to hear this terminology a lot in the Forex market when we talk about pips. In futures, it's ticks, stocks is points. So don't get confused because someone keeps saying pips, 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 pips. Just look at it as in just getting started, points. How many points is the market going up as we start? So if we were to go to a chart right now, Jeff, can you go to a chart for me real quick so they can understand what I'm talking about in a pip? Go to a minute chart. Perfect. So now, if you was to look at these numbers over here, these numbers are pips. This is 0, this is 5 pips. It goes up by 5 increments, starting at the end. So you see how I started at 35, 40. So each time it goes up, this is 5 pips in a 5-minute chart. So when the price is at 1.3135, you're going to look at the last 2 numbers and calculate 5 pips up from there. So now you're looking at 1.3140. So the market went up 5 pips, so 5 points. So however you want to look at it. So don't get confused or discouraged because you don't understand what a pip means. So just look at it as points. The market went up 5 points until you understand the terminology of trading. So if you was to look at, let's say, an hour chart, the market is going to go up a little bit different. Let's go to a daily chart. See how price goes up in 100 increments. So if you're looking at price right here at 1.3 thousand, right, these are going up in hundreds. So now, if you look at this market, 1, 2, 3, 4, 5, 6, 7, all these, this is 100 pips movements, each one. So 1.31 is a 100 pip move. 1.32 is another 100 pip move. So for 1.3 to 1.2 is 200 pips. So just say 32. It's just like simple mathematics. 300 to 32. So just look at the math. These are interest rates. So you basically trading interest rates. So never get confused on the numbers. So now let me go to a 4-hour chart to see the difference. Now daily is going to give you hundreds. Now let's go to a 4-hour chart. I think I have a 4-hour. Let me see the weekly. See, the market is closed today because we're looking at it on a Saturday. If it wasn't a Saturday, I would log in so you can see the 50 pip moves in between these numbers. So Monday, when we come back, I want to break down the 50 pip moves. Since it's Saturday, the market is closed. It's not letting me go to a 4-hour chart and break down into the smaller increments for you guys. So that's based on the pips. Jeff, you have any more input on pips, or you think we touched everything about it?
I think we good on
I think we touched everything about it too. So that'll be all. Let's break down the trade, how we actually look at it.
Break down how we look at
We start at a weekly. Let's do it. Open it up. See how
See what we're looking at.
Can you go to
Forex.com. Think of Swim?
No, I think it's one other one.
Think of Swim.
I got
For
that
Ninja
ball.
Trader?
Ninja Trader. You got Ninja Trader on here?
No.
Market. Order. And what price is that right now? 1.10247. Stop.
Stop at about
1
800.
point
Don't say 970.
1.970.
Yeah, say 970.
1.970. The limit. One point 1.690. I still got the 690. Yeah, you want to get in right before the sellers get in because of the swing reversal of the demand here, the 1, 2, 3 swing reversal. You take it back up to this swing reversal of the supply here. So you'll start getting out at the base where the price is at, all at the base around here.
And all you doing right, if you look at these trades right here, if you look at this pattern right here, like picture yourself in a room, right? You have a floor and you have a ceiling. And every time, and let's picture this, let's picture price as being a tennis ball, right? If price is a tennis ball, every time you throw the tennis ball to the ground, to the floor, it bounces up. And when it hits the ceiling, the tennis ball is gonna come back down. So when price hits the floor, it bounces up. When it hits the ceiling, it comes back down. And that's all that's happening right here. And that's the same thing that we identify. The same thing Berg just showed. Like, look at that floor. Boom. You come into your floor right here. Bam. Money. Shmoney. Do your shmoney dance, because you about to get that paper.
And see how he gave you a point of view from a banker's point of view. I gave you a point of view from a person that never traded at the bank but got introduced from trading from a person that worked at the bank. But this is how the institutions trade. They don't look, a lot of them don't look at candlesticks. They look at the line chart because it take away the distraction of the chart. So this is a good way for new beginners to trade where you don't get confused. So like, what is it in golfing? What is a shooting star? What is a hammer? What is a bouncing ball? What is a tweezer top? What is a tweezer bottom? You don't get distracted. So you just look at the base of the lines. This your highs here. This your lows. This your lower low. So you got your lower low, got your higher low right here. It's simple. So now this is the area of demand that Jeff pointed out. I like that, Jeff. I like the line chart, but I just never really used the line chart like that. But it's simple.
So you see it, right?
It's simple. I like the line chart.
Floor to ceiling.
So Florian, I like that. I really like it. And I like the pullback right here to bounce off this area for a further move up to the uptrend.
Yep.
So if you look at this line chart, and I never really even looked at the line chart, I would start getting out in these areas.
Yep. Because it's going to go, it's either going to go to one or two things. It's either going to go to the lower high or higher high, or it's going to go to the lower low.
Because the guy that go down to retrace, come back down to go. That's just the market for you. Because they have to get more demand in. So this is a great setup for this week. And so if you're looking at the market tomorrow on 1/26/2020, as soon as the market open at 5 p.m. tomorrow, I would wait a couple hours, let the spread come down. I would just market order a buy.
Agreed.
Just market. Don't even wait on the setup, just market order. We already put the entry 1.0247 for market order. We already put your stop at 1.970, and we put your limit. It's your exit where you're going to get out the trade at 1.11690 area. Yeah. So you got your entry, your stop, your limit. Market order.
And that's what we do.
And we going to do it. What you mean?
That's what we going to do.
This is a real account. This is what I'm going to do. Sunday. So this is our trade for the week.
Yep.
That's it. And don't forget, currency formula, reach out to me and Jay at Berg Forex on Instagram, at hello_I'm_J on Instagram, at Berg and J_Forex, and at Trading on Repeat. We go live 3 times a week on Instagram, 7 a.m. Mondays, Wednesdays, and Sundays. So stay tuned. So make sure you guys follow us on Instagram. You ready? Hey, we're here at Sister to Sister Magazine event. Me and Jeff here from Currency Formulas. Day traders, we're here to support the cause.
Congratulations, Jamie Foster Brown, for your relaunch of Sister 2.0. We know it's going to be something amazing. We're looking forward to doing everything we can do to support you in the future. From a financial and trading perspective.
So I was asked, why was it important to start Sister to Sister 2.0? One of the things over the course of my life, we've seen a lot of things kind of leave us that should stay. So when I met Jamie, I knew a lot about Sister to Sister over a period of years, through my early teen years, and I would see it in the barber shop, I would see it in the beauty shop. But, then technology came into play. And a lot of the magazines went away, a lot of the newspapers went away, and these are things, in my opinion, that we should hold on to. So Sister is important to our community.
Congratulations, those are going to be beyond amazing, beyond impeccable. Sister 2.0 is coming back at you.